A lot of traders might not know that this is a absolutely huge week in the financial markets.
Are you sure about that?
Now, if you look at Forex Factory or myfxbook.com for what's coming in the news, you might not see a whole lot. But I'll show you why this week is massive for markets and why volatility is expected to be high and markets are expected to move. So here's the big reason why markets are going to move this week. You have Tesla and Visa earnings on Wednesday. You have Meta. You have Thursday, Microsoft and Google. And Friday, you have Chevron and Exxon. The big story this week is that big stocks are reporting their earnings. And these numbers are really important to the financial markets right now because, well, I'll show you. Inflation recently has been more stubborn than previously thought. What we've seen here, the blue represents the US inflation or the CPI, and what you can see here is that it really has struggled to head towards that 2% target. We've stayed elevated above that level for a suspended period of time, and market participants are now also seeing Jerome Powell, the Fed's chairman, come out a little bit more hawkish. And when you hear hawkish, narratives from the Fed, the idea there is that, again, they may not cut rates this year. And if that story is the new prevailing one, that's very different than we're going to see 3 or 7 rate cuts this year. If you go from 7 to 3 to now potentially 1 or 0, the market is not going to like that. I'm talking specifically about the stock market, but it has implications on all other markets. So inflation is staying stubborn. So why is the stock market still relatively strong? Well, what's helped us get to these levels is continued strong earnings out of US stocks. In my opinion, inflation being high is obviously a negative, but strong economic numbers out of the United States, as well as companies reporting good earnings, can counterbalance some of those negatives. So a lot of people have been wondering, how is the stock market still up this much? Well, it's because companies, especially the big ones that we all look at, like Nvidia and Apple and Google and Microsoft, these big companies are still putting up really strong numbers and expected guidance for the future to continue to see that. So if you're somebody who's watching the indices this week, this is a massive week. In fact, it's probably one of the biggest weeks, which rivals with, CPI and NFP and all that sort of good stuff. That being said, the stock market, the S&P 500, is a couple percentage points now off of its all-time highs. 5280 was a distant pipe dream now because suddenly we find ourselves below 5,000 at the time of recording this video, and we've seen a consistent pattern throughout the day. In fact, I'm curious to see if that pattern emerges by the time you see this video after we get it edited and uploaded to YouTube. We've been seeing this pattern where in the morning you get a push up and then the market sells off. Morning push up, sell off. Morning push up, sell off. Morning push up, sell off. That's been a consistent pattern. The question is that going to continue to be the case? So far on this daily candle at the time of recording it, it's starting to show that same pattern. And if we do continue to see that pattern, we could very quickly take out this level of support here at 49.60. Now, if 49.60 breaks, again, we continue to probably see a slide down to this next level of support, which we can go ahead and draw in on our screen here. So if I just hover over here, I'm just going to draw in a level of support. But so far, the momentum is in favor of the bears. We've broken this upward trend and we're putting in lower highs and lower lows. So my cautionary tale as we go into earnings season is, it's all riding on these big tech earnings. Is Tesla going to deliver? Is Microsoft going to deliver? Is Google going to deliver? And Meta is of course another big one, right? So you have all these big names. If they don't, the market probably sees a significant sell-off much further. And if they save the day, we could perhaps start to see a bit of a reversal. What I'd be looking for in terms of getting bullish would be, let's see some bottoming formation start to happen. Yes, you've got a long wick here, but I'd like to see some higher lows on like the 4-hour chart. And for those watching indices, that's what I'll be looking out for going into this earnings season. Now, for me currently, and what I'm positioned in terms of the indices, I've got 2 trades that I'll talk about. I am currently short the Russell 2000 index. I am doing this via the IWM, which is an ETF that tracks the performance of the Russell. And what you can see here is I actually added twice. I now have 400 shares short on the Russell. And my plan here is that if we break through the highs, I will stop out. And if we continue to roll over, this is where I entered my 2 different trades. One was in this, again, same pattern, pop in the morning, sell off, pop in the morning, sold off. We've come back now up to this area, but as long as we hold resistance here, I'll stay in the trade. If we break through the highs, I will stop out and take my loss if needed on the Russell. Otherwise, I would love to see if this thing can roll over and continue its downward trend. Another market making big moves here recently is gold. You can see gold actually topped out around 24.10, 24.20, put in another lower high, and then sold off. And before you get too bearish on this one, which I know there's a lot of bears out there for gold right now, just be careful. We're coming into a level of support while we continue to trend overall to the upside. I would not say at this point that gold looks bearish because, again, there's still geopolitical risks in the world. Gold is elevated by what's happening in Iran and Israel. The conflict there continues to cause questions and uncertainties. Same thing with Taiwan and China and Ukraine and Russia. There's just geopolitical risk that is keeping price, in my opinion, elevated on gold. That being said, am I buying this pullback? The answer is no. I'll show you why. So I've pulled up specifically the scoring on the Edge Finder for XAU USD, that is gold spot price. And what you can see here is that we get a neutral score of just +1. Why is that? Why am I not bullish on gold? Well, here is why. If we take a look at the economic data, US economic data, whether you're pointing to GDP numbers, manufacturing PMIs, retail sales numbers, unemployment rate staying low, and interest rates rising, that's bearish for gold. This paints a picture of stay out of the way of gold longs, in my personal view, and how the Edge Finder scores its system. This is not a guarantee that gold is going to go lower, but it's a warning sign to me not to get overly bullish on gold. We've seen a great run. I'm going to wait for things to correct and ideally for economic data to come out cooler before I'm starting to get long on gold again. That's my personal view. That's, again, how I use this systematic approach within the Edge Finder. Technically, the technical analysis that I just did shows gold is still, in an uptrend. It's just in a range now. It's hitting support. If you have a strategy, by all means, do your thing. But for me, until I have the fundamental or the economic data on my side, I'm not really going to go chasing gold's price right now. So neutral readings. Now, why am I not getting a sell reading? If all that economic data is, pointing mostly bearish for gold, well, the commitment of traders data is still positive. Institutional money seems to be buying it. Seasonally, it's a decent time to be bullish on gold. I'll show you that in just a second. And overall, there is still an upward trend. This is how the Edge Finder scores everything in its top setups algorithm. I've just walked through the very high level basics of how this is done. And of course, within the Edge Finder, we have everything here from currencies, commodities, indices, etc. And by the way, why am I bearish Russell? Well, the economic data has come out pretty hot, and that means yields are on the rise, that interest rate category keeping us overall pretty bearish on the Russell, at least for now, unless something changes. Not to mention the commitment of traders data was a bit bearish for Russell. I'll show you the COT data in just a second, but let's first talk about that seasonality on gold. So here's our month-to-month seasonality chart when selecting gold. This is what we get in terms of data. January is historically a positive month, and I like to look at the blue graph because that is the 10-year historical average price action. And what we can see is March, February, January, and April are positive months for gold. That's come true for most of these months. It's been pretty right. Now, if you take a look at May, it's pretty flat. June, pretty flat. July, pretty flat. Then we get bullish in August, bearish in September and in October, and flat for the rest of the year. Seasonally, it's a decent time to stay bullish on gold until we get into May, where it just kind of drops into neutral territory. Now, as we get into the commitment of traders data section, let me just remind you guys that our sale is ending on the Edge Finder soon. Currently, you can get our biggest discount of the entire year, and this sale is ending in the next few days. So listen up. If you've been thinking about getting a copy of the Edge Finder, this is probably the last chance that you ever will get to get it this low of a cost, because we're probably going to raise the price over time. We do that over time as our cost to maintain and build the software has gone up every year, so as our cost for the product. So let me give you a fair warning. If you're somebody thinking about getting a copy of the Edge Finder, the link in the description, the very first one, will allow you to send a direct message to our team. If you do that, they can get you up to 45% off of the tool today. And again, this is ending soon. Why is it so big? Why such a big discount? This celebrates 2 years. This month celebrates 2 years since we launched the product. and we've had so much fun developing it. It's been really one of the coolest things I've done in my life. We have so many people who are using the tool, so many people who are using it to help them get funding challenges passed, so many people who are help building consistency in their trading, or just adding fundamental analysis to their trading and making fundamentals more approachable for the everyday trader, not just the hedge fund managers on Wall Street. So if you'd like to get a copy of this tool before this sale ends, again, first link in the description. Let's take a look at this commitment of traders data report that we got. What we can see here is that when looking at the most bearish things on a net position basis, this is kind of their long-term holdings or long-term overall weighting on each thing. The yen, the Swiss franc, the Australian dollar, the CAD, and the 10-year bonds. These are things that institutional money seems more bearish on. And then on the bullish camp, we have silver, oil, gold, the Nikkei, and the Dow Jones. So when we look at all these things, these are more bullish, these are more bearish things on a longer term basis. Now for traders, let's move past this section and I'll tell you why. So when we scroll down here to the latest weekly filing, this is much more short-term in scope. Traders, I would advocate would be more interested in this section than the top section. The main reason for that is that this number up here changes very gradually, very slowly, and it's kind of long-term contracts for the most part. This, however, shows you just the latest changes that have been made. In the last week, did they buy gold? Did they sell gold? Did they buy the dollar? Did they sell it? We can see that in this broken out table that makes it very easy to heat map everything, and we sort it by net percentage change here. Okay, so when we take a look at this, here are some of your top buys in the week: the S&P, the 10-year bond, the Kiwi, the ZAR, the Australian dollar, copper, silver, NASDAQ, USD, yen. Gold is flat at 0.05% change, so not too much of a shift week over week. On the bearish side, we have Bitcoin, the Dow, the Nikkei, Platinum, USOIL, the Russell, the Swiss franc, the euro, the CAD, the pound. So these are your most bearish week over week things. Now, what am I looking at? I'm looking specifically at the net change week over week column to see what the shift in contracts really looked like from the commitment of traders data from the CFTC. Another thing to point out here is that if I select only major currency pairs in the top setups algorithm, what we can see is the dollar is pretty bullish across the board, whether you're looking at the euro, the Kiwi, the pound, the dollar CAD. Most things are favoring the dollar right now. And here's a look at the dollar index itself, which is basically continuing its upward trend. Seems like we found some support lower time frame here and have now pushed off of that. In my view for the dollar index, if we do get a pullback, I'm interested in the long side and pretty much on the sidelines until that happens. The euro dollar is pretty much an inverse of the dollar index for the most part. If we do get a pullback up into this area, potential sells could be interesting to me. Pound dollar, same story. We have to actually drag our fibs. Now this 61.8% retracement looks pretty good. Look at the sell-off that's happened on the pound. The dollar just looks very dominant right now with stronger than expected economic data relative to its peers. It looks like it may be the last to cut rates when it compared to its European counterparts, which could dramatically keep the dollar strong relative to the euro and the pound. The dollar yen is also trending higher. Pullbacks could be interesting. Dollar Swiss, again, trending up to the upside as well. Dollar CAD trending up. Possible pullbacks could be interesting. The level that looks the cleanest to me is this 1.36 level. Australian dollar is retesting some levels of resistance. Again, bearish on this one. Kiwi dollar still trending lower overall. The VIX is down on the day, but still elevated at 18 right now relative to its recent history in the 12s and 13s. And I am no longer in my silver trade. After it broke this level, I went ahead and took a loss on this one. So just an update on that. I think I lost about 950 on this trade. Oil is pulling back, though in my opinion, this thing only really continues its upward push in a rapid succession if we see some sort of geopolitical conflict. But overall, in my opinion, the trend is still intact to the upside for the oil market, simply because demand side could continue to be strong due to stronger than expected US economic data. I might be watching for pullbacks, but I'll wait for confirmation from the systematic approach that I use with the Edge Finder before getting any long setups going. Also, I just want to mention, if you're somebody who's looking for a new brokerage to trade with, there are several linked down below in the description. And the reason I point this out is that if you're somebody who likes free money, which who doesn't, check out some of the links that are there, because there are some special sign up perks that can either get you free products, welcome bonuses, or free stock shares when you sign up. Again, the links down below in the description have been curated, set up for you to get something for free. Each one of them offers some great free value. So check them out. They also will be supporting my channel if you choose to use them. Thanks for watching, guys. See you next time. If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, Eightcap. Eightcap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your Eightcap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out Eightcap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.